Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. It is Macro Monday. Let's take a look at some legacy info. First, we'll take a look at the ETF flows from last week, which continue to be negative. ETF flows over the past 3-4 weeks have been uninspiring, negative to flat on most days. ETH certainly looks worse in that there's just pure apathy on those products for the most part. And on the BTC side, it's mainly IBIT. Just goes to show you the impact of BlackRock and how much that has mattered for BTC. Just in pure name recognition alone, I certainly recall people downplaying the significance of BlackRock when IBIT was announced. They were clearly wrong. As you can see, most of these blue bars are BlackRock. Most days, most weeks, they are positive as far as the flows are concerned. So we're not seeing the ETFs buy on the BTC side. Some flows into alts, but really nothing major. Most products on the week, this is from CoinShares, most products on the week last week on the BTC spot side, negative, most of the activity again coming from the United States. Looking at the Google Trends for BTC, we've completely retraced any search activity back to pre-election levels. Generally, we don't really want either things to keep momentum going. We don't want maxing out here on Google Trends, and we don't want Google Trends just surfing at sub 25, sub 20, just on a relative value number basis. This was the 2021-2020 move. This was bear market recovery. This was bear market. So it's kind of like the VIX in that we want a steady state here and we don't want spikes because usually that's a motion maximum one way or the other, bullish or bearish. But it's good to see continued activity when you see it. But to see this retrace entirely, I'm not so sure super bullish, especially coupled with the ETF flows. This is Google Trends for buy gold versus buy Bitcoin in the red there. We did eclipse the generic buy gold standing 25 to 50 in the blue here a few times. This was 2021, 2020, and this was recently in post-election 2024. And you can see how much that's sort of diverged from buy gold, whereas buy gold has been trending higher. So kind of niche alternative data points, but basically telling you what you already know, in that retail currently in the market isn't super interested here based on search volumes rather, through Google. Looking at Saylor's post from today, the 2 billion raise has already been used to purchase BTC. Will he keep raising is the question. Many, of course, wondering why hasn't price moved if he's acquired 2 billion? Well, it hasn't moved down. That's probably the most important part. Now we know spot ETF sold over 1.1 billion total over the past 2 weeks. Some of that is basis net neutral trading, so it's not exactly impactful for price, but it takes two to tango as far as the markets go. And we clearly aren't seeing enough buyers to hold price up or to bring price higher. We've also seen some of these state initiatives for Bitcoin reserves start to fail. Most of these probably fail. Most of these probably never see the light of day. Utah looks to be the furthest along into potentially enacting a bill. But when we look at Montana, North Dakota, Pennsylvania, Wyoming, those have all failed. And that's okay. It's good to start this process if you're one of these people that wants to see this. United States, of course, being first, talking about that. And we already have state pensions buying BTC and MSTR through the ETFs. So we don't necessarily need a bill that says we must hold this thing. But it's interesting, of course, to track this and follow it. And as retail has sort of dropped off on the BTC side, on the alt side, I think it's pretty obvious that retail appears pretty maxed out here. And this is total 2- stables over BTC, continues to be bearish. That's a new multi-year low for this pair. And you've done well if you've been able to quickly trade in and out of things. But for the altcoin holders, they've been perpetually losing against BTC here. That day may change, but the trend is the trend, and the trend has remained bearish, continues to be bearish, and this may take the entirety of the year to bottom. I don't know. It's clearly just not in a place where alts are favored over BTC just yet. Before I go any further here, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of the Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro at the link in the description of this video. Non-investment advice, crypto trading involves risk of loss. Cryptocurrency services are provided to US and US territory customers by Paired Ventures Inc. PVI, DBA, Kraken. Looking at BTC here, this is really the main issue for BTC and really for alts, because if BTC drops to 80, alts drop God knows how much, right? So the issue here is post-election, we shot up pretty significantly, had a lot of buying activity, et cetera, et cetera. But on the backfill here, there's a large gap now between 73 and 90. 20-week moving average is all the way up here at 90.45, somewhere in there, which is basically the horizontal support as well. We can measure the theoretical range breakdown here, just taking the high, taking the low to high rather. That gives you the yearly pivot. Doesn't really satisfy VPVR conditions necessarily, in that potentially we're talking about downside lower. I think a lot of people would be looking for 70, so it'd be interesting if we don't go there and then we bounce. But as far as levels, if things do get ugly for BTC, the first level would be the 20-week moving average, and then it would be the yearly pivot. We of course have the cloud, which on the daily has been bearish now for 2 weeks. 99.2 is the level where things start to look bullish again. So still a lot of uncertainty even in the TA as far as where we're headed. It's just if this then that. If we break 99.2 higher, I like being more bullish. If we break 90, I think everybody expects bearish continuation for some period of time. And alts today especially have started to break down even more. Solana there down pretty significantly, even just today. And it's breaking or has broken a series of moving averages. If we fix this back to the 20-week, that's the 20-week all the way up here. That was the cloud all the way up here. So it really gives you a heads up. Generally, where do you want to live? You want to live above the 20-week. You want to live above the cloud. This is the same for BTC and most assets. You're also losing a yearly pivot here. You're moving all the way back. It's already back to 150 today. So just not a good look for Sol, which was the retail darling, the casino darling, thanks to the meme coin launches, and ETH not really doing much either, but not positive on the day. So there's really nowhere else to hide outside of BTC that has done consistently well or looks like it's more bullish than bearish. Even LTC, which has been leaning bullish, still just chopping around up here in the range. And we can also look at this in a slightly different way. The block has a bunch of different indices here. And just quickly, not even applying TA, just looking at these indices, top 30 tokens, okay, we're back in the range, looks okay. Layer 1 tokens, similar to top 30. Layer 2 at multi-year lows. Meme coins retraced everything at the 2024 level lows. DeFi tokens never really picked up again in a multi-year range. DePIN tokens at lows, multi-year range. Gaming tokens at lows, multi-year range. AI tokens completely retraced the 2024 and 2025 highs back to the pre-2024 breakout. Small cap tokens, new low, new multi-year low there. Mid caps, same thing at the lows. Top US tokens, not as bearish as the others, but breaking down. Solana ecosystem, complete collapse here. I'll put the link for this in the description of the video. But as you can see, not much is going on, no matter how you try to slice and dice this. Ethereum ecosystem also completely retracing. Top Solana meme coins back to 2024 levels. Top Sol tokens, excluding meme coins, new multi-month lows. So there's really not much of anything out there as far as strength is concerned. And I think we've been pretty clear on this channel how bearish alts have looked and have been across the board. So I don't think the TA has lied at all at this point, especially relative to BTC. Looking at events for this week, the big one on the calendar is going to be PCE on Friday. What's not on this calendar is Wednesday, NVDA earnings. That's going to be another big volatility event one way or the other. But I think the bigger issues are also what's going on in the government here with the government shutdown looming potentially on March 14th. Still just a lot of uncertainty around what's going to happen there. Are they going to run it to the deadline before they figure something out? Is it going to be another continuing resolution? Is it going to be a massive bill? Is there going to be some sort of tax cut, as Trump says here, one big beautiful bill? Nobody really knows. I don't think people are very optimistic that we're going to see one big beautiful bill, but we might. So markets may just be in a holding pattern until some of that stuff resolves. All the while that's going on, we of course have Doge and Doge headlines and tariff headlines. So it's just a lot going on right now in government. And that tends to make people a little more cautious, just generally. As far as the Fed rate cut probabilities go, not much has really changed here. In expectations, percentages have maybe shifted a little bit towards more cuts, but what's going to matter the most is unemployment numbers and any uptick in actual inflation. We had another UMich inflation expectation survey last week that unsurprisingly came in hyper-partisan, just like the last one. New York Fed does their own inflation expectations. That's sitting somewhere around 3%. So we'll see. We'll see what happens. But so far, the path looks like cuts mid-year at the earliest. Looking at truflation, we're hovering sub 2.5, above 2. Not much has really changed here over the past 2 weeks. We are certainly not seeing runaway inflation in truflation. Not yet. I mean, this is the most sensitive of instruments. It's where you're going to see it first. This thing exceeded CPI rather significantly in 2021 and 2022. It was early. And so if that's the case for inflation and in CPI, we'd see it here first. So I don't see that yet on that metric. PCE this week, like I said, this is down last month. It was 2.6. This print for last month is going to be likely around 2.5. Shouldn't be hotter, shouldn't be higher than last month's print. But if it is, I'd imagine markets would not be very excited about that. Good news is the current projections for this month's PCE on the next print is continuing to fall. Core PCE also down slightly, but not by much. In the liquidity conversation, reverse repo, always something to keep in mind, especially if we've got debt ceiling conversations and liquidity and TGA. And is the TGA going to get drained into March 14th? Is that going to be positive for liquidity? Is tax season going to be a negative for liquidity? I think this is also part of the reason why Q2 has generally been better than Q1 for BTC because of tax season. Certainly for alts. I can't imagine alts do significantly well this far out from tax season. As people are paying their tax bills, what are they selling first? They're selling anything that's down. They're selling anything that's highly volatile. And they're selling anything that they're up significantly on that they're not married to. So I think for most people, that's going to be altcoins. But reverse repo here almost drained completely. GDP estimates still relatively flat and above 2%, coming in at 2.3% on the last estimation. The big one, I think, for a lot of people is going to be the jobs number. Between deportations and Doge, what does that actually mean for the rate of unemployment? It could go down. The unemployment rate could go down. That's certainly possible. And it's another just wait and see metric every month until we get a better handle on where this is headed. Looking at some early reports of, I'm not going to call them a doomer account, but they're doomer leaning, let's say, macro edge. The data is the data, and it's showing higher layoffs, higher retail closures. Starbucks is laying off a bunch of people. Joanne Fabric's going out of business. You know, it's kind of stuff around the edges, but it's continuing. So if you are bearish, there's some easy data points to point to and say, look, this is a multi-month high, right, for job cuts. So unless your expectation is the Fed cuts quickly based on rising unemployment, this is going to be a problem. We've also got hedge fund giants like Steve Cohen talking about the negative effects of tariffs and Doge on the economy, talking about austerity effectively and how that's not going to be good for risk assets, most likely, and how the majority of the gains are behind us, at least in the near term. I'll put the link to this video where he actually discusses what he's saying in the description here of the video, but certainly worth a listen and considering as we chop around here and do a bunch of nothing. Maybe it's best not to start forcing a bunch of super margin risky leverage trades everywhere, right? Looking at earnings this week, there are minor earnings this week. Riot, Marathon, TeraWulf. I thought there was more. I'm probably missing a few on this list. We've got Zoom, Kava, AMC, big one, obviously NVIDIA, some AI stuff with Snowflake, Stellantis, also this week. Talon Energy, maybe on the data center side, worth paying attention to. But NVIDIA after the close will certainly move the tech market one way or the other, depending on how that ends up. Looking at the S&P, like I said last night, what do we want to see? We want to see a bounce above Friday's close. This is the type of thing that looks good to me. We're still above the daily cloud. We're still in the multi-month chop range. There's nothing that's screaming here one way or the other. But if you have a preference, you'd rather be above the cloud than below. This could be a dragonfly. This could be a Kijun bounce. It's looking rather optimistic. So to see BTC continue to roll over is interesting because S&P looks okay here. The Qs look less okay, but still not terrible. We did fall down below the 522 level. Briefly, this could close at the daily key June. This is salvageable. Still not a good look to retrace a breakout like that after consolidating for many, many months. So not a super clean read on either of the major indices. IWM still looks like nothing anybody wants to trade ever. This is small caps Russell 2000, and it has chopped higher, but now it's in potential bearish reversal, head and shoulders territory, and just doesn't look generally happy to be here. And on the industrials DJI, you're of course getting calls for a double top here, as this looks pretty clean from a tech perspective. So of the major indices, the S&P generally looks okay. It doesn't look as bad as you might think relative to some of these headlines we're seeing on some of these companies. Looking under the hood a little bit, Mag 7, the ETF rolling over here, it had been consolidating for quite some time. Bearish TK cross, price in the cloud. Not where you want to be if you're bullish. Not where you want to be. So even as an index, not a lot of love for Mag 7 at the moment. SMH also ranging. Absolutely nothing going on here. Largely dominated by NVDA, where nothing's going on. IGV tech sector ranging. Potential double top here. Potential cloud rolling over alert on this one. Looks very ugly over the past 4 days. And again, there's just not many places to hide. Similar to alts and BTC, it's kind of the same with S&P and legacy. This is consumer staples XLP. This is a chart that actually looks decent. Bullish TK cross, price above cloud, maybe a little bit late on entry. Maybe an eventual inverted head and shoulders here, shoulder, head, right shoulder down the road. But certainly looks a heck of a lot better than most of the charts we've looked at on the legacy side, outside of the S&P, which just looks okay. Individual names, Apple has reversed strongly, maybe on the lack of AI spending, the lack of CapEx, back above the cloud here. And probably for all of us, it's good that one of the Mag 7 is doing something, because most of them are chopping around flat or pretty angry at the moment. I'm still bearish on Apple, the company. They announced a bunch of jobs in the United States. Great. They announced factory. Great. Awesome. But the products just aren't for me. And that's my own bias. But the chart does look much better than most of these. And this is NVIDIA, of course, which, what is the read here? I don't have a read here. It's flat. It's back in the range. Maybe an inverted head and shoulders, shoulder, head, shoulder, diagonal neckline. I don't know. Post earnings, we'll know better. Sub 125 post earnings isn't where we want to be if we're bullish. Above 140, things would be significantly more bullish, but we'll see. I don't ever play earnings for the most part, so have fun out there, those of you who do. Tesla still hanging out below the cloud. Just a monumental collapse after the election. Certainly nothing you'd want to touch here on trend. Like the alts, look, if it's below the cloud, it's below the cloud. It's black and white. It's a litmus test. Good things happen above, bad things happen below. That should be expected. Doesn't need to collapse here, but not something I'd be interested in relative to trend. And then we have WGMI, the minor ETF. This thing has continued to chop lower, continued to be highly volatile, continue to hold in or below the cloud, and just doesn't look generally like it wants to be here. It really doesn't. It looks like it wants to go lower. We have hash rate coming off the network. We probably have miners getting squeezed a little bit relative to the difficulty. Transaction fees are flat, quiet, low. That means revenues for miners also falling as difficulty rises. And it's just a tough environment for miners out there. So even though this isn't necessarily clean from a candle to candle perspective, the trend is clear. This is down. You could say, well, maybe this is a falling wedge, falling channel. That's something to watch. But collectively, the miners have rolled over pretty significantly. This is a new multi-month low for WGMI, and now it's back to the pre-election level. So like altcoins, the chart is the chart. And then you've got Mara, which I think today hit a new discount to NAV relative to their BTC holdings. Not exactly true considering a lot of that's debt, but something to continue to monitor. Now, I don't think anybody wants to pull the trigger the first time anything goes on a discount, but when we're talking about significant discounts to holdings, that's when people are more likely to take action. So this could be the first of many days monitoring some of these miners whose BTC holdings are worth more than the actual business itself. Just something to keep in mind. And then this is WGMI relative to BTC, which is almost at a new all-time low. So Alts haven't really worked. Miners haven't really worked. Unless you're trading in and out of positions quickly through some of these monthly moves, it just really has not paid, unfortunately, to hold miners broadly. So PCE Friday, NVIDIA earnings Wednesday, and we should know how bearish we are next week. That's all I got for this one. Like, dislike, comment, share, subscribe, and happy trading.